People are always asking why the Bitcoin price goes up or down. Well, the short answer is simply it's supply and demand. When you have the supply fixed of an asset, you simply have to look at demand. And obviously, price goes up when demand increases and price goes down when demand decreases. Now, the more complex answer is not just simply supply and demand. You have to ask yourself, why is demand going up or down? In many cases, Bitcoin, through the first number of years, was not a financialized asset. What does that mean? It simply means that people, retail investors, were holding the asset, and they didn't behave the same way that Wall Street or institutional investors behaved. But now Bitcoin's beginning to be held by more and more institutional investors, more of those Wall Street organizations, more of those capital allocators. They have Bitcoin on their balance sheets or in their investment funds. And so when Wall Street starts to react to something in the news, whether it's something like interest rates or a new variant of a virus or anything else that could spook Wall Street or get them excited, they treat Bitcoin like many other assets in their portfolio. Now, Bitcoin doesn't have a completely highly correlated relationship to other assets yet, but it definitely has become a little bit more correlated in the beginning years of 2020 and 2021. Now, what I expect to continue to happen as more large financial institutions buy Bitcoin is that Bitcoin will become more and more financialized over time. So one is really important for non-financial organizations and institutions to hold a majority of Bitcoin. We don't want the banks or billionaires holding Bitcoin and controlling it by simply being able to say, well, at any point, I can't actually control the network. I don't control 51% of the mining power, but I can simply sell all of my Bitcoin and I can crash the price. The second thing is that we have to pay attention to a lot of those macro factors. Obviously, we live in an environment where inflation is rampant. We have 6.8% CPI and interest rates are low. They're at around 0% in the United States. Well, if all of a sudden the macro factors started to change and interest rates got raised, but also the inflation numbers started to come down, you'd have to ask yourself how many people are still going to flock to Bitcoin. I personally don't think that 100% of people are simply adopting this digital currency because of macro factors. I don't think most of the people who are going and buying Bitcoin or earning Bitcoin are saying to themselves, I'm doing this because inflation's at 6.8%, or I'm only doing this because interest rates are at 0. No, instead, I think that Bitcoin serves as a different asset for different people. It accomplishes different goals. In some cases, people are actually using Bitcoin to protect their purchasing power. In some cases, people are using it as a medium of exchange because it's quicker or faster. They can use things like the Lightning Network or a layer 2 technology in order to whip it around the world instantaneously and completely for free. And in other cases, people are simply using Bitcoin as a speculation tool. It's the most risky thing in their opinion that they have in their portfolio. And they simply want to have a small exposure to it because of the asymmetry that it provides. Regardless of why people are adopting it, it's very clear that the growth rate of Bitcoin continues from an adoption perspective at an incredible rate. Bitcoin has been growing at 150 to 175% annually, compounded for a decade. That is incredible growth for any sort of technology or financial product. Now, the big question that we're going to face is as Bitcoin continues to go up and down, you have to look at what is the relative relationship of volatility between Bitcoin and other assets. Right now, it's about 12% move in Bitcoin is equivalent to about 1.7% move in the S&P 500. That means for every 12% that Bitcoin goes up or down, that's the equivalent of the S&P going up 1.7% or down 1.7%. Volatility is the name of a game as it gets adopted, as the world tries to price what is this worth. And right now, the world is saying the strongest computer network in the world, the most decentralized automated central bank, this decentralized peer-to-peer payment system, it's worth about $1 trillion in market cap. I personally think it'll be viewed as much more valuable than that over time. But understanding the short-term price movements is not nearly as important as having a long-term perspective. If you're a long-term thinker, if you're a long-term investor, then the short-term price movements shouldn't affect anything you do. Don't make short-term investment decisions if you're a long-term investor. That's the key to letting compounding work. So whether you think that Bitcoin is the future or you think it's simply a speculation tool, ultimately what you have to look at is these short-term price movements don't matter over a long period of time. Pay attention to what Bitcoin's doing, pay attention to its fundamentals, pay attention to the macro environment. But just because you're educated doesn't mean that you have to act.